always, is Cheryl D'Souza, and this is the show where we'll be taking you through all your queries, and we'll be very shortly connecting with our experts who will be here to help you answer your queries and get a better understanding of your portfolio. But before we do that, let's take a look at the markets and what the markets are up to right now. We're around the 24,410 levels, thereabouts. It's been quite lackluster today and very flattish day of trade coming in because we've not seen much momentum today. A 6-point movement rather is what we've seen on the Nifty, so absolutely flat day of trade coming in for us. Sensex also very nominally in the green, a flat line over there with a slight positive bias above the 80,800 mark for now. India Wix looking very good today, a 4% cut coming in on India Wix, and we're around the 18.3 mark right now. Remember, we had scaled 19.2 yesterday, looking good from that compared to that level. Nifty Bank outperforming your Sensex and Nifty, a 0.3% uptick coming in on Nifty Bank, looking good on the banking space, and it's a lot of names that have been aiding this move, like AU Bank, IDFC, Kotak, Axis, SBI, all of these in the green. Other than that, the advance decline ratio looks positively in the favor of the advances today, and the ratio is quite positive, so looking healthy. Broader markets are outperforming the benchmarks. You have a Nifty mid cap that's 0.5% higher, small cap also doing pretty well. Just before we wrap up the market check, let's take a look at what the sectoral move is. Media is your big gainer, followed by IT, PSU banks, bank and energy. On the flip side, FMCG on the back of subdued numbers by Dabur continues to lag. Pharma, metal, auto, realty also in the red. That's what the market construct is looking like right now.
All right, so that's the way how the markets are looking like at this point in time. Pretty dull day of trade coming in, but yes, there are a lot of news factors that to watch out for. Remember that Trump has actually teased that he's going to go with that big first trade deal announcement today. Reports are suggesting that that trade deal will be with the United Kingdom. So Britain is the first trade deal that that Trump is all set to sign. And remember, back home we also have the crucial India-UK FTA also that has been actually signed. So on the back of that also, you've seen a lot of movement in select pocket or sectors. Case in point being in alcohol beverages, in auto, in textile, Tata Motors, United Spirits. These are some of the counters that were seeing a sharp up move in yesterday's trading session, and let's see if they have the trickle down effect in today's trading session as well. But let's move on and let's bring on board our guest for today. We have Sharmila Joshi, who's joining us on the fundamentals, while we have Kunal Parar, who's joining us on the technicals. Remember, viewers, this is a show where we get your answers for all of your stock related queries. You can write to us on the WhatsApp number flashing on the top of your screen. And do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity and the time horizon in case you've already purchased the stock. In that way, our experts will be able to help you better. So let's get to our experts quickly. A very good morning to you, Sharmila, as well as Kunal. Thank you so much for joining us on ET Now. And before I kickstart with taking all the stock-related queries, Sharmila, let me come to you and let me ask you, how should one gauge the market, given the fact that, yes, you saw the correction in the market on back of the Trump tariff tirade that was going on. Now the fact that markets are recovering, given the fact that you have Trump that is now talking about trade deals with select nations, the 90-day pause coming in as well. So UK could be the first one that they will sign the trade deal. Apart from that, you had the India-UK FTA also that has been signed, and you have earnings. So which is that one news factor that you need to watch out for and then actually strategize going ahead? Because all of them are, there is a lot of moving parts in the market right now.
Miss some, because you didn't mention the latest sort of worry that we have, whether we will escalate, if our situation with Pakistan escalates or not, and so many things hanging out there. So I think the point I really want to make it in short is that it's a very uncertain sort of a world that we are living in over these last couple of years, and market seems to have come to sort of grips with that, which is what we are seeing really in this last correction ever since we had the tariffs announced. Because we did see some good buying coming in from the FIs, so that has been a positive trend for our market, that the FI trend has sort of turned tide, and now we are seeing buying coming from there. And then we have this latest uncertainty which has joined the pot, huge pot of worries that we have, and we don't know where that will take us. But I think, very simply put, I think I would, going forward, concentrate on two things. One is earnings, as you mentioned. Because at the end of the day, when everything sort of settles down, that is what you're going to look at. So concentrate on earnings. If you get an opportunity to buy anything in all this volatility, if you get a chance to buy something good at a reasonable price, go for it. Hopefully, a lot of these issues will get settled over the next couple of months. The trade deals, May could be a good month because that would be that is what the market is sensing, at least, that you could get indications of where trade deals are getting signed, etc. Or at least if nothing is getting signed, you know that as well. That like half of your 90-day period is done and you don't have anything sort of on the table. But you will get a sense where things are. So all said and done, as I said, concentrate on earnings is what my advice would be. And if you get, especially if you get dips, and we can't at this point in time take away from the fact that we could see dips going into this month. So I think just brace yourself and as a long-term investor, look for good valuations.
Right, brace yourself is what Sharmila is saying, given the fact that yes, there are a lot of news flows you need to watch out for. But Kunal, very good morning to you. I wanted to get your take. Do you think we all need to brace ourselves for some more dip in the market? Yes, there was a time when we were getting very used to markets that only correcting. Then we had this 3 weeks or 4 weeks of rally where you started feeling that, oh, it looks like everything is back to normalcy. Now you see markets consolidate. Do you think now should we actually start getting used to consolidation, or get worried that there could be some sort of a minor correction in between?
Well, good morning. And I'm not seeing any major dip in the market as of now because ongoing conflict between India and Pakistan. Yes, we witnessed some good, healthy correction in the market based on this, tariff war and all. And market fell up to the level of 21,800. But right now, all the things has been settled down and no uncertainty is there in upcoming trading session. So I'm not seeing any kind of downside momentum in the market as of now. But one thing is there, since last many days, Nifty has been trading in a sideways formation only, and it seems that the stock is Nifty is going to form its flag formation. And if we get the breakout of this flag formation, then further upside would be there. And this time, if we get the breakout of this flag formation, then one-way rally would be there up to the level of 25,600 to 26,000 as well. So yes, positive news, positive indication, positive breakout will be there if Nifty sustain about 24,600, and downside as of now strong support comes at 24,200. So nothing to worry about this market. And yes, if any uncertainty is there in future, and if by chance market fell up to the level of 23,800, though chances are very less for this level, but let's say if market approaches this level, then it would become a good buying opportunities for creating long-term portfolio.
Okay, so that's the market view coming in from Kunal as well as Sharmila on what the strategy should be going ahead amid a market like this. But on that note, we'll slip into a very short break. Viewers will be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get you answers for all of your stock-related queries. We have our experts waiting by patiently to answer all of your queries. We have Kunal Parar on the technicals, while on the fundamentals, we have Sharmila Joshi. And let me kickstart taking your query. This one is coming in from Ramya, who's writing to us from Chennai. This one is for you, Sharmila. She has India Mart Intermesh at 40 shares at a price of 2,730 rupees per share. She wants to know whether it's good time to accumulate. She can hold on for the next 2 years, or would it be just better to hold it without accumulating some more? What's your take?
I think for now, definitely hold what we have. Overall, the valuations do look okay. But as we had just spoken a little while earlier, you could possibly see dips, and overall, monsoons will give us a better picture even as far as earnings is concerned. So, according to me, this is one of the businesses that would look good from a one or 2 year perspective. So definitely hold what you have. Valuations are also looking attractive. But to add, I think just give it another 3 or 4 months to add further.
On India Mart, Kunal, we'll come to you. Next query coming in from our viewer Sudha, who's writing to us. Time frame is of 2 years. She's asking if you could recommend any 2 to 3 stocks that could be bought today from Mphasis, Coforge, Shriram Finance and L&T Finance. Out of these 4 stocks that our viewer is eyeing, which stock do you think, or a couple of stocks, are you liking out of these 4? I'll repeat once again: Mphasis, Coforge, Shriram Finance and L&T Finance.
Now, out of these 4 stocks to two stocks which were attractive. Shriram Finance, as of now, looks very attractive from the finance sector. The way stock has been trading on its daily chart, we may see a very good upside momentum during upcoming trading session. Now, horizon is a little bit longer for up to somewhere around 2 years. So definitely this stock may give some good return. Right now, stock is trading at 629. We may expect somewhere around first target would be at 700. And if stock breaks this level, then further upside would be there up to the level of 900. So Shriram Finance looks very attractive at present level. And from Coforge and Emphasis, I think Emphasis looks very attractive as of now based on the technical chart. Right now, stock is trading at 2417. Recently, stock has given a buying for bottom formation breakout. Right now, stock is trading at 2470, and we may see upside momentum up to the level of 2755. And if stock sustain above this level, then further upside would be there up to the level of 3200. So yes, out of these four stocks, I think one should focus on Shriram Finance and Emphasis.
This one is coming from Naman Deora, who's writing to us from Kolkata, wants a fundamental and a technical outlook on Info Edge. Naman has not mentioned whether he's already purchased the stock or he's looking to purchase it or no. But Sharmila, let me get your take first on the fundamentals. How does Info Edge look to you? Do you think, yes or no doubt, this one also has seen some sort of stock price adjustment, and maybe that's the reason why that fall, I can see it on the chart. But nevertheless, what's your take on Info Edge?
Could you just?
I'll go to Kunal first, then I'll come back to you, Sharmila. You can take a break. Kunal, what's your take on Info Edge? How is it looking on the charts to you?
Right now, stock is trading at 1396. Stock looks very attractive on a daily chart. Not only this, if we look after the weekly chart, monthly chart, stock has been trading above its 50 and 100 MA. So yes, trend is positive trend is there on the larger time frame. One can get into the stock at present level because few days back we already got the breakout from its strong resistance which was placed at 1365. So yes, this is the perfect level to get into the stock. If you talk about upper side target, then first target comes at 1480, and if stock breaks this level, then further upside would be there up to the level of 1640. So yes, Info Edge looks very attractive at present level, and for timing we will keep SL at 1260.
Right, so that's the take coming in on Info Edge. All good, Sharmila. Whether you want to give your take on Info Edge, too many businesses to look at for Info Edge, but also the fact that it is an incubator of businesses also.
Yes, precisely. So, this is perhaps not the best environment for a lot of those businesses that they are sort of incubating. But given the fact that, this is really that way a new age company, because, the kind of businesses that business model that he has, the businesses that they are into are very old, but their approach to them is new, and that has worked well for them. But of course, I think their numbers have not been that great. And even at this point in time, their valuations look very attractive. So that is the only reason why I think that you should stay invested in this company. Give it a couple of years, because as you rightly said, I think that the businesses that they're incubating are very interesting. Whether it is a Naukri, whether it is a matrimony, so their real estate business, they're all very interesting businesses, and that makes me think that you should stay invested in them, giving it about 18 months period.
Okay, so that's the combined view coming in on Info Edge. That's a fundamental as well as technical view. Let's move on, and Kunal, we'll come back to you. Our viewer, Mr. Nagkumar, is writing to us from Hyderabad, and he holds 100 shares of Eicher Motors purchased at 5,500 and 100 shares of Siemens India purchased at 2,810. He can hold both of them for a long term of 2 to 3 years. He's asking if he can expect a decent return. What are the levels that you're spotting on the charts, let's say for a couple of years from now, and how are Eicher Motors and Siemens looking to hold from the medium to the long term?
Eicher Motor first right now stock is trading at 5,425. We may witness some good upside momentum counter from the present level up to the level of 5,862. And if stock breaks this level, then we may see a very good upside momentum even up to the level of 64.
All right. We'll also get in Sharmila to weigh in her view when it comes to both of these companies, Eicher and Siemens. Sharmila, what are you making of these companies fundamentally? Because we've had some adjustments coming in Siemens India as well, and Eicher Motors also is a stock that we are getting a lot of queries about. So give us a sense of what you are making of Eicher and Siemens right now, because our viewer holds 100 stocks of 100 shares of both of these companies, and they're asking for a 2 to 3 year view.
So between the two, I prefer a Siemens. But as we all know, they have an energy business spin-off which is happening currently. You need to give both the stocks time. Both of them are very good, solid mid-cap plays. But as I said, for now it's a hold on both. But my clear preference would be Siemens.
Just try and get that Kunal's audio fixed and get back to him to ask the rest of the queries. Till then Sharmila is the sole expert who will answer the queries for us. Then let me take this next query. I'm getting from Vijay Kirti, wants to know about REC. 150 shares at a price of 606 rupees per share. Wants to know, makes sense to stay put with this, hold or average? What's your take on this one, Sharmila? I meant exit, average or hold. What's your take on REC? Because this one also saw a sharp rise, and everyone's been backing REC and PFC as the power financiers, given the fact the power theme is a long-term structural story that everyone's been talking about. But this one also saw its fair share of correction.
So Cheryl, you pretty much answered the question because power as a sector is so important for us, and the fact that both these financiers, the REC, PFC, they have done remarkably well over the last couple of years, and the valuations also went ahead of earnings. Then we've seen a correction. So you're currently in that phase where the stock price is consolidating, but the business still looks attractive. So I think if you're a long-term investor, both to my mind, both REC as well as PFC make a lot of sense. So hold would be the advice for both.
Okay, so hold coming in on REC. Shamila, interesting query coming up next. It's a stock, Bajaj Finance is the stock in question. And our viewer Murlidhar is writing to us from Bangalore. They hold 250 shares of Bajaj Finance at an average price of 3,336 rupees. Their question is, what will be the holding after the bonus issue, and how long should one continue to hold? How fundamentally sound does Bajaj Finance look like to you right now?
So I don't even really, meaning, I mean, what I'm trying to say is the investors bought it at a great price. Now you have a bonus issue coming up. So I think what you really need to see is that if you have the sort of, if you have like a good portfolio and you have the kind of bandwidth to stay invested in Bajaj Finance, then obviously you must stay invested because the business looks attractive. Yes, I think the bonus will mean that you will get more shares. So then that's the call you need to take, whether you want to hold, post bonus or not. But if you just ask me on a very fundamental basis, looking at the stock, looking at their earnings, looking at what I think that they will do going forward, then for me the stock is an absolute hold.
Right. This next one that I have is coming in from Siva, who's writing to us Chennai, and yes, we have Kunal back with us. 19,000 shares, Kunal, of NMDC at the price of 64 rupees per share. For the next 4 to 6 months, he wants to know what sort of a target should he eye for NMDC?
Well, if we talk about NMDC, then first target would be at 71.40, and if stock breaks this level, then further upside would be there up to the level of 80. I think we may see a very good upside momentum in this counter. And second thing, this is like good dividend paying company as well. So double benefit would be there in terms of capital gain and in terms of dividend as well.
So that's the take coming in on NMDC. Sharmila, we'll come to you. Let's talk about the entire textile space. It's been a buzz since yesterday on the back of the FTA that we've signed with UK, and our viewer Swati is asking about that. She's asking if you have to recommend a stock from this textile space, would it be Gokuldas, would it be Arvind, or would you be recommending anything else? And what's the entire view coming in on this space?
So I'm glad that she has a couple of names in mind. I think that given the fact that we are looking at a sort of an export-facing theme on the back of the development between the two, I think Gokuldas is the sort of my preferred company within that play. But from I think between the two, both the valuations look sort of reasonable. slightly on the higher side. So between the two, I prefer a move with us.
So that's the take coming in on those counters. Let me take this next query then, and this one is coming in from a viewer that is not mentioned the name, but has 100,000 shares of HPCL at a price of 402. The stock that he had is before the earnings. Now wants to know what to do with the stock. It's falling from here on. What's your take? Kunal, on this one, HPCL 1000 shares, price 402 rupees per share. And let's not forget the biggest caveat for all of these OMCs is the fact that they also react to what's happening in the crude oil prices, and that too on a daily basis.
Well, if we talk about HPCL, then stock has already given a breakout of its downward falling trend line. Not only this, stock has been trading in its upward rising channel formation on a smaller time frame. So technical equation is only suggesting for upside momentum only. But obviously, OMCs will get the direct benefit from falling crude oil. So wait for the time being. We will see very good upside momentum in the counter, and this is like the highest dividend paying company as well in Indian market. So nothing to worry about this counter in short term. If we talk about upper side target, then the first target would be at 420, and if stock breaks this level, then one way direction would be there up to the level of 480. So please hold this stock as of now.
The take coming in on HPCL. On that note, we'll wrap it on the queries that we have been addressing. Sharmila and Kunal, thanks so much for joining us and helping our viewers navigate their portfolios and get them a view on their prospective stock queries as well.